will now be recorded.
Good evening to all of you. Are you able to hear my voice? Is my voice audible to you?
Yes, ma'am.
Yes, ma'am.
Okay, fine. So I'll just share already one of the case studies we were dealing with. Okay, I'll just share you the file and then I will start the session. Give me 2 minutes and I'll just share the file with you. Yes. Good evening to all present for today's session. So back after a long break. Yes, so hope all your exams were good. So how were the exams? Did well? Everything went fine?
No, ma'am.
Yes? No, didn't study
Okay,
properly.
okay, ma'am.
So when are your results coming up for these exams?
One subject came, ma'am. I failed also, ma'am.
Is it? So prepare well, appear for the next time with a good amount so that you score well. Okay? Prepare well, clear off all your exams, don't keep anything pending. Okay, now we'll continue where we had stopped in the last class. Fine. So you remember we were doing this case study, pharmacy case study. The pharmacy case file already you have with you. One more I've sent is Bangalore cafe case study, which we'll do it after finishing of the pharmacy case study. Okay. So pharmacy, you open your workbook as well as your Word file. Are both ready? then we'd be able to start. Done. So
Ma'am,
let's start with
excuse me,
the
ma'am.
yes, pa.
Ma'am, could you resend the pharmacy case study, ma'am? The
I think
group?
one of your friends can share that file. Maybe they'll have it. No, actually, if you share, the thing is, already you have half worked on it. I think if you don't have that
Ma'am,
file, because if it's, huh,
I got like a new device, so it's not really backed up. I can't see the old messages, ma'am. So could
then
you
I
resend
you
the
do
file?
no no. One more thing, it's not the problem to resend. I'll resend, but you can ask one of your friends to resend it now, because again,
Yes, ma'am.
it'll take a long process for me to resend. Okay, and one more thing is
Okay, ma'am.
you have to start solving from the beginning. Remember, we had started off with the computation of everything from the beginning, arrived at your gross sales and your PAT and everything. So from there, you have to
Yes,
start
ma'am.
again. You got my point, right? So that you can, or you can just
Yeah,
observe the
okay.
calculations today, and then you can finish off your case study later. Okay,
Okay, okay, ma'am.
done. Done. And yes, I hope all of you have saved your Bangalore Cafe. This one, no case study. One minute. Let me share the screen. Sorry about pharmacies case. So if you all remember, we had completed till here. Do you remember? Till here we had done. I hope all of you have saved that file, had saved that file that day. Otherwise, you have to rework from the beginning. I hope this is there till here.
Yes, ma'am.
Except, yeah, because if you have not saved, then from the beginning again you have to rework it again. It's a double work. So if you have completely, I mean, if you have reached till PAT, I hope PAT all of you had got that day, the same amount which I have displayed in the screen here. Any changes, or you have not got anything which you want me
No
to
changes,
repeat it?
ma'am.
I can do it. Fine. So all of you have got the same amount. Now we'll go for this part B, where you have to enter all the amounts of deposit, renovation, and the total investment. Okay. Now, what was the total amount of deposit required to start up this franchisee or pharmacy? So I'll just go back to the case study here. So yes, so I'm coming back to, yeah. See, to operate this franchisee, it needs to have a 750 square feet for the retail shop with a lease rental of 100 per square feet per month, and the total rental contract is for 5 years, and the total amount of deposit required is 10 lakhs at the start. So which means a deposit of 10 lakhs is required as discussed earlier, plus a renovation cost to renovate the entire premises, 20 lakhs in addition is required. So totally the gross investment is 30 lakhs, 20 lakhs plus 10 lakhs. Okay. So here deposit, what you're supposed to do is equals to 10 lakhs. This is the amount of deposit. So enter the 10 lakh amount. Renovation is equals to 20 lakhs. So total investment is equals to sum. Just add up both. That's sum. So you get how much? 30 lakhs. Okay. Now, out of this, what is the portion of debt and what is the portion of equity? Now, out of 30 lakh investment, how much was sanctioned by the bank? Now, I had gone to obtain a loan to the bank, if you remember. Now, 30 lakhs was the total amount required by me to start up this pharmacy. Out of 30 lakhs, how much the bank sanctioned for me? So I'll just go back to the case study here. The bank sanctioned 60% of my demand. See, I'll just put up the statement here. It can be funded by 60% of the bank loan with 12% interest rate. Can you see here? Can be funded by 60% of the bank loan, which means out of 100% of 30 lakhs, 60% was sanctioned. Remaining 40% is raised by equity. See here, the remaining should be funded using the equity. So here, going back to the Excel workbook, debt is equals to 30 lakh into 60%. Press enter. So which means 18 lakh. Again, equity is equals to 30 lakh into 40%. So it is 12 lakh. So like this, you're supposed to fill up the details. Please do it. And then I'll start with the cash flows. But before starting the cash flows, let me discuss a few things about it. Are you done?
Yes, ma'am.
Yes, now coming to the cash flows. Yes. Yes, so coming to your CFS, we have a small discussion on that. 1 second. So if you observe the screen here, yeah. So before going to the cash flow statement, one brief discussion about it. Okay. So basically, yeah. So how do you define the cash flows? It's basically a document, to be frank, where there is a source of inflows and the outflows of cash. So a couple of times you would have prepared your cash flow statement and the fund flow statement. So what is the format of your CFS? CFS cash flows, it's a summary of cash inflows and cash outflows. While fund flow statement, you have sources of funds and application of funds. Okay, so almost the same parameters, but of course here or there we have minute changes. So a cash flow statement is a document that shows a real-time portrait of a company's gross profit and the operating expenses. When a company's cash flow is positive, it suggests a state of good financial health. So my cash has to be in a good condition. Okay, if it is not in a good condition, if it is an okay condition, I need to improvise it. And if it is in a negative condition, I have to take care of it. So it's a matter of concern. Companies with a positive cash flow can pay their day-to-day expenses, invest in a new equipment, pay dividends to the shareholders, and attract the outside investment. See, what happens is when a good amount of cash flow is running in the company, a new asset can be purchased in the form of equipments, it can be in the form of plant and machineries, motor vehicles, it could be for for any kind of an investment. Okay, also to pay out the day-to-day expenses, okay, the routine expenses, okay, it could be the big hand expenses or the petty expenses, it could be any day-to-day expenses of the company. Also very important to pay dividends to the shareholders, preference and as well as equity, as well as to attract the outside investment. Suppose if there is a plan to acquire any asset, right, any purchasing has to be made. Okay, so that time that can be done if there are good amount of cash flows. On the other hand, what happens on the other hand when a financial statement reveals a negative cash flow? As I've told you, if it is not favorable, if it is running on the other hand, it is a matter of concern. It suggests that the company may not have enough cash to cover its daily business cost and it risks insolvency. So lot of issues can arise, lot of risk has to be undertaken, lot of uncertainties evolve. So all these things happen, okay, if there is insufficient or negative cash flows. This statement is also one of the three key reports. So which is one of them? Along with the income statement and the balance sheet, your cash flow also plays a crucial role actually. See, so far you have have prepared so many reports, right? So this cash flow statement also plays a pivotal role, actually plays a key role, okay, in determining a company's financial position. Okay, so and which are those three? In that cash flows, we have three wings. We have the operating cash flows, the investing cash flows, as well as the financing cash flows. Okay, so what are operating cash flows? Of course, the funds which are made out from the operating activities of the business. So, operating cash flow offers a portrait of its day to day operating activities, namely income from the sales made. So, any revenue generated from the sales made by the company will be put up as the operating cash flow. And yes, and any payments made in terms of salaries, in terms of rents, routine expenses of the company, vendor fees, lease payments, taxes, interest, all these will be shown as outflows under the operating activities. So, a company whose sales exceeds its operating expenses is cash flow positive. So, whatever revenue is generated from the sales made, okay, and so if this exceeds or if this is in a higher position than the operating expenses, then our cash flow is positive. So, I need not worry about my financial position on the first wing. Second, investing cash flows. Cash flow from the investing activities refers to money linked to the long-term investments. So when a company invests in, let's say, a startup, its investing cash flow is negative. Obviously, see, if you are starting up a new company or you're taking up a franchisee, that time you cannot even think of investing immediately. It takes some time. So that time, by default, your cash flow will be negative only, investing cash flow. Okay, so that time that expectation can't be done, but over the years, over the period of time when investment has to be done, when sufficient amount of cash is running, then this may turn positive. So when a company cashes out on its investment by selling its startup shares, its investing cash flow is always positive. So whenever assets are being acquired for, okay, so that will be an outflow of cash. And whenever there are sale of any assets, okay, or any kinds of investments, that will result in cash inflows. Okay, and third we have is the financial cash flows, the last wing. Cash flow from the financing activities refers to the net cash linked to financing activities that power many companies. Okay, so some companies sell the ownership shares to investors to raise money for the operating expenses. Right? So the shares are being sold to the investors so that the funds are being raised for the company. Okay, that is an inflow, and some financing activities also bring in money, like selling bonds to generate the cash, and others send money out in the form of paying dividends and buying back stock from the investors. So that payment of dividends and all these will account for cash outflows. So inflow, of course, when there is what raise of money, cash inflows, right, from bringing up the capital or bringing up any kinds of bonds to generate the cash, and outflows when the dividends are being paid to the shareholders or payment of taxes is being made. All these will account as cash financing cash outflows. And for some startups, financing cash flows will play a more significant role than operating cash flow in the company's overall cash flow management. So, considering all these three wings, our net cash flow should be positive. Okay, yes. So, it is then we arrive at the final amount to determine the firm's financial soundness. So, here coming back to your pharmacy case, where we start up with the cash flows. Yes. Now we come to the cash flow calculation. You have to carefully understand here. Okay, now you are in the year zero. Please understand, we are in the year zero. In the year zero, now what is the initial investment required for the company? Total investment required is how much? It is 30 lakhs. Now, please think in in the form of cash flow statements. Now, initial investment of 30 lakhs is required only when an amount of 30 lakhs is being spent. This franchisee can be started off, right? So which means I have to spend these 30 lakhs to start up this business. So this initial investment will become equals to minus 30 lakhs. And why it is minus 30 lakhs is because only when there is outsourcing of 30 lakhs, this franchisee can be put up. Okay, so equals to minus 30 lakhs. It's an outflow of money. Second, and this has to be done only in the years you don't go for year one, year two. All this, your PAT will come up there because you've started to operate the franchisee. Okay. Now, after initial investment, we have debt raised or repaid. So, debt raised or repaid is now how much debt is being raised and how much is being sanctioned and received by us. Yes. So out of 30 lakh requirement, 18 lakh is sanctioned by the bank. Okay. So this 18 lakh, okay, is an inflow for me. See, debt raised on the first case, repaid later. Now, let me repeat again. Out of 30 lakh, 18 lakh is the total loan sanctioned by the bank. 60% is being sanctioned by the bank. Yes, we already made a note of that. So, what does the first half say? Debt raised. How much was raised in the year zero? 18 lakh. Now, that 18 lakh, what is raised by the bank, it is an inflow for me. Funds are coming to me. So, it's an inflow. So, equals to 18 lakhs. Now, slash, it is showing as debt repaid. Now, this 18 lakh has to be repaid by the end of the fifth year. Year zero, I get 18 lakhs from the bank, and by the year end 5, this loan has to be repaid. So, there, how will you take? In the year 0, you have taken up as 18 lakh, and in the year 5, you're taking up as minus 18 lakh. And why it is minus? Because you're clearing out the loan. So to 0. Right? So plus 18 minus 18. So you have no loans standing, okay, at your balance. Now, next, deposit refund. Now, deposit refund. What is this deposit refund? Now, to occupy that space, see here, please look at the second para. To operate the franchisee, it needs to have 750 square feet for the retail shop with a lease rental of 100 per square feet per month. The total rental contract is for 5 years and the total deposit is 10 lakhs at the start, which means 10 lakhs deposit has been paid to occupy the 750 square feet space, and this 10 lakhs has been paid for a period of 5 years. At the end of the 5th year, whatever deposit is being paid by us, that will be repaid to us by the last year. I'll repeat again. Deposit of 10 lakhs has to be paid at the start. Initial, we have to pay. So when we are going to get this 10 lakhs back? When we are leaving off the space. So at the 5th year, we are going to get this amount back. So here what is being told? Deposit refund. Right? So here, so when the deposit is being made, it's coming back to us. How will you treat the same in your workbook here? Should I give it as minus 10 lakhs or it will be plus 10 lakhs in the year 5?
Minus 10 lakh.
Why it will be minus 10 lakh?
Because the whole sum we repaid, no?
No, please understand the case. Now, to occupy a 750 square feet, we are depositing 10 lakhs. Now, you leave this. Now, you take your own personal example. Now, like you are looking for a house for rent, okay? Let's say 10,000 is the rent which is being paid per month. Now, let's say 10 months advance has to be paid. So, how much you're paying to the landlord? How much advance is being paid if it is a 10 months advance? Yes? It is? How much? It is 10 months advance you're paying before you occupy the house. The 10,000 per month is the rent. So he says like you have to pay 10 months advance. Now the 10 months advance, you're paying at the start or you're paying at the end?
Start.
The start.
Correct.
Start.
Yes. Only one person is answering. I hope others are also active. Right? So now 10,000 is being paid every month and 10 months advance is being paid at the initial period. So which means 1 lakh has to be paid. Okay. This 1 lakh what you pay in the initial stage, now you're leaving the house after 1 year or after 2 years. Okay, you're just vacating it. Now let's say after 2 years, at the end of the second year, you're vacating the house. That 1 lakh is paid to you. Is it coming back to you does it remain with the landlord? What 1 lakh you pay as advance?
Coming back.
As deposit.
Coming back.
Correct? Yeah, now you're on the
Yes,
right
ma'am.
path. The same thing only to occupy the 750 square feet. I'll come back to the case study. Please understand. In case of any confusion, I'll repeat it again. See, to operate the franchisee, total space required for us is 750 square feet. Now, to get this 750 square feet to start up this business, I had to pay 10 lakhs deposit. 10 lakhs is because he's charging that much. You have to pay 10 lakh per month rent is going on. In addition to that, this deposit has to be put up to occupy that space. This 10 lakhs is paid in the year 0, initial period. In the year 0, this 10 lakhs is being paid as deposit. Now, year 5, I am winding up. Okay. Year 5 is being wound up. So, see here, please come to the last 2 lines of your case study. After 5 years, the franchisee will be handed over to Apollo and the deposit will be refunded to the ABC company. please look at this. I'll repeat again. After 5 years, the franchisee will be handed over to Apollo and the deposit will be refunded to the ABC company, which means once the franchisee hand over to the Apollo, okay, and what happens at the end of the 5th year, the deposit will be refunded to the ABC company back. So what 10 lakhs was paid in the year 0, in the year 5, that 10 lakhs will come back to us. Okay, us in the sense, in this case, it is ABC and company. ABC company is the one which is taking a franchisee from Apollo, right? So that 10 lakhs will come back to ABC company. So which means it is plus 10 lakhs. It is not minus. When deposit is being paid, it is minus in the year 0. But here, what it is being showing as deposit refund. See here, please look at the words here. It is deposit refund, which means in which year we are getting back the deposit. A refund means what? Coming back to us. So in the year 5, the deposit is being paid back to us. So that time equals to no minus. It is equals to 10 lakhs. That's all. Hope it's clear, the deposit refund. So in the year 0, you're going to put up the deposits. Year 5, the business is being wound up, is being handed over to Apollo. So year 5, you're going to get back the deposit. So it will be here plus 10 lakh. If it was here, it would have been minus 10 lakh. Here it is plus 10 lakh. That's all. Any confusions in this case?
No more.
Okay. Now coming back to your PAT. PAT, now whatever you have calculated above, the same thing you're going to put up here. That's all. See here. Equals to, please see carefully, equals to, just select this, that's all. Cell referencing. Press enter. Again. You can do it for one, drag for the rest, left to you. Like that, you can take for the rest. So you've got for everything here, see. And now total cash flow. Please observe first and then do it. Don't do with me along only this part, because first observe how it is being calculated and then you go. Then I'll explain you about the IRR. You can do till the total cash flow. So how do you compute the total or the net cash flow? What is net cash flow? Sum of the inflows and the outflows. So equals to sum. And then please select from initial investment till the end. Even though we have two empty cells here, that is also considered. Okay, that doesn't matter. It'll take the right values here. So please select from initial investment till the PAT cell, shift key, close the brackets and press enter. So which means it is minus 30 lakh plus 18 lakh. So net cash flow is how much? It is 12 lakh minus 12 lakh. So you calculate for year 0 and please drag it till year 5. Yeah, this is how you're supposed to get. See, for year 1, the net cash flow is 3,85,491. For year 2, 5,19,637. For year 3, 6,68,953. For year 4 is 8,35,093. And for year 5, it is 2,19,887. Okay. So please do finish till here and then I'll explain you how to calculate the IRR. Able to get it?
Yes, ma'am.
Okay. So what is basically is IRR? IRR basically stands for internal rate of return. Okay. So this internal rate of return or IRR is a profitability determinant for a particular project. So what I mean to say is this indicates the profitable opportunities for a particular project. Now, if I invest in this project, will it yield me higher returns? Approximately by how much? At least percentage wise. Higher I get the rate of IRR, higher is the profitability for this particular project. Lower is the rate of IRR, less are the chances of investing in this project. Because if I have a very less IRR, okay, then I can't even think of investing in this project. But if I'm having a higher rate of IRR, a higher percentage of IRR, I can think of investing in this project. That's how you evaluate a business opportunity, you evaluate an investment opportunity. And very important, these investors can use this IRR to determine whether to undertake an investment or no. As I've told you, higher is the percentage, fine, I'm going to invest in this project, spend lakhs or crores of rupees. But if it is not yielding, okay, sufficient returns, no investor will even think of risking himself. Rare are the cases. So first this has been considered, this has been analyzed, and then the projects are being started off. And very important, as we know, they should exceed your cost of capital. So whatever investments are being made, okay, that has to be succeeded by the revenue what is being generated if if this project is being started. Otherwise, if any risk is considered, then of course investors will think before investing in this particular project. Is that clear? So now you have to calculate the percentage of IRR for this pharmacy project. If this pharmacy project yields a higher IRR, then ABC company will go to get the franchisee from the Apollo and start up this pharmacy. But if this IRR, is or comes at a lower rate, then it will drop the idea of starting the franchising. Okay, so how do we calculate this IRR here in this Excel workbook? So please observe equals to IRR. Okay, just consider your total cash flows from year 0 till year 5. That's all. Shift and then close the brackets and press enter. So we get 32% as the internal rate of return. So it's a reasonable, a good amount of percentage. So higher is the rate here. So thoughts can be made to invest in this project to start up the franchisee, and this could be run with ease for a period of 5 years. But if you get a very less percentage, as I've told you, chances are there of not investing in this project. Clear? So please calculate the IRR. I'll just display the formula again. Yes, are you able to get the IRR?
Yes, ma'am.
So till now you have solved this complete case study and you've calculated the PAT, then came down for the cash flow calculation. Finally, you have calculated the IRR. Okay, so how do you feel? Okay, when you have solved the entire case study, are these concepts clear? Okay, or any confusion you have? You can just unmute yourself and you can let me know. This is how you build your financial modeling project, case by case. Is everything clear for all of you?
Yes, ma'am.
Okay, what about the other students? Are they active in the class? Because only one voice I'm hearing.
Yes, ma'am.
Yes, ma'am. Yes.
Yes, ma'am.
Because onlines are always, if you log in, if you're doing some other task, that will be not good because it's a very important phase what you're seeing. Case studies solving. Okay, so see now if you see the entire case study, it becomes easier for you to understand now. Okay, so now you have solved this pharmacy case study. Now I've sent you one more case study, which is Bangalore Cafe. Okay, so that you can just open again both the Word file as well as the this one. What is that? Excel workbook. And please go through the case study. I'll give you 10 minutes time. As I've told you, read once, twice, thrice, take your time. 7 minutes till 7:30. I'll give you time. Read a couple of times and then I will start up this case study. Because I cannot hurry up on this. It requires a lot of understanding. Yes. Have you read the entire case study?
Yes, ma'am.
Yes, ma'am.
Okay, good. So it's a very interesting case for you. All the eatables are here. Your favorite items are here. Okay, and it's a very practical case. Now in Bangalore, you see everywhere there is a cafe in Bangalore. Yes. So it started off with all Rameshwaram Cafe, then we have a Brindavan Cafe, Krishna Cafe, right? So Brooklyn Cafe, like that. So many we have. No, not to list a few. N number of cafes only in Bangalore. I'm just listing. So now to start up a cafe in Bangalore, can we start just like that? No. Again, a homework is required before starting up a cafe in Bangalore. So this is also a same case like that. Now Sumit. Sumit is very desirous of starting up a cafe in Bangalore. Not only one cafe, he wants to start up a chain of cafes in Bangalore. Okay, he has that idea of starting up cafes in Bangalore. Okay, this is his, uh, you know, um, objective, or he wants to do this project. Okay, and Sumit has also identified the locations, places where he wants to start off these cafes. Now in Bangalore, let's say, for example, he wants to start one cafe, let's say in Jayanagar. Okay, one cafe in, let's say, in Maleshwaram, the other cafe was in Vijayanagar, the other cafe is in JP Nagar, like that. So he's already decided that where he wants to start up the cafe in Bangalore. Even areas are being fixed. So, and he's also determinant about what products he wants to sell in that cafe. Okay, all this has been decided by him, determined by him, but the other things have to be worked out. Okay, so I'll come to the first para. Sumit wants to set up a chain of cafes in Bangalore. Sumit has identified the locations and the products that he wants to sell in his cafe. So as I've told you, where he wants to start, what he wants to sell, both are being determined by Sumit already. That homework is being done. The remaining he has to work out. He wants to sell the below mentioned items in his cafe. What are all the items he wants to sell? He wants to sell tea, Maggie, shakes, samosas, puffs. Initially, tea, Maggie, shakes, samosa, and puff. So only 5 items he wants to sell in his cafe. Now, in the initial stage, later on, he's going to add more items in the upcoming years. As of now, only 5 items. To operate this cafe, Sumit needs to have 450 square feet space for the retail shop. Okay, so total space required to start up this cafe is 450 square feet. Now, see, already you have worked in your pharmacy case. So, pharmacy case has given you the experience of understanding a case study and also solving the case study step by step. So now when I'm starting up this new case study of cafe, so for you the understanding becomes easier now, right? So slowly understand the case study, no hurries. To operate this cafe, it needs to have 450 square feet for the retail shop, okay? And the lease rental is how much? 150 rupees per square feet per month. And the total contract is for how many years? For 5 years. And for these 5 years, a deposit of 10 lakhs has to be made at the start in the year 0. Okay, then we'll talk about the online aggregators. Until then, I'm not going to talk about that. So after this first para, okay, I'll come to the second page here. You have an appendix here. Please come to that second page. So 5 items he's planning to sell in his cafe. That is tea, samosa, Maggi, puffs, and shakes. Now, what you see here, average daily sales expected for the first month, post which it is expected to grow at 1% mom. Okay, mom means not your mom, it's month on month basis. Mom stands for month on a month basis. That's how we elaborate mom. I'll repeat again. Daily sales expected for the first month is this. Okay, post which it is expected to increase at 1% every month. So for every year there is an increase of 12%. So every month if there is an increase of 1%, except the first year, because in the first year, moment you start, you cannot expect increase in sales. So except for the first year, for the rest of the years, you have an increase of sales by 12%. How 12% is computed? Every month, if there is 1% increase, so total period, how many months are there? We have 12 months. So it is totally 12% increase in the sales. And what is the total quantity sold for each? For the first month, see, for the first month, for the, I mean, on a daily basis, 100 cups of tea are sold, 50 samosas, 50 units of Maggi, 30 puffs, 20 shakes. This is on a daily basis. Please be careful. I'm not given on a monthly basis. On a daily basis, for one day he's selling 100 cups of tea for the first month. Clear? Next, the second para. Personal cost per month. Personal means what? Staff requirement. Now, Sumit alone cannot run the cafe. He has to take care of all these cafes in Bangalore. He has to manage everything. So it cannot be a one-man show. Okay. So one staff has to be there, one team has to be there to run this cafe successfully. So who are all required to start this cafe? A manager is required. Cooking staffs, at least 3 people to cook are required. One cleaner to clean the tables, chairs, and the entire premises. And others, maybe for packing, to bring up any items, for all the miscellaneous work. Okay, so now every month the manager is being paid 20,000, and three staffs, three people, I mean, cooking staffs are required, and for three, the salary is paid 15,000. So how will you consider this? 15,000. This 15,000 salary per month I've given as 15. How will you assume this 15,000? Is it for all the three members?
No, ma'am.
Per person.
So 15,000 into 3, ma'am, per person.
Very good. Yes, because if we give per head means no one will come and cook in the cafe then. So and one cleaner 12,000 and others 18,000. Okay, this is the salary details. That's all. Now please open your workbook now. Please open the workbook.
ಹೇಳಿದ್ರು ತಾನು ಯಾವ ಬಟ್ಟೆ ಹಾಕೋತೀನಿ ಅಂತ ನಾನು ಆಗಲ್ಲ
Please,
ನಂದು ಯೂನಿಫಾರ್ಮ್ ಅಂದೆ
please,
ವೆನಿಸ್ಟೇ ಕೊಡ್ತಾರೆ
ಅದೇ ಹೇಳ್ದಲ್ಲ, you were telling someone about the size.
please
ನಾನು
mute yourself.
ಯೂನಿಫಾರ್ಮ್ ಹೇಳಿದೆ
Please mute
2
yourself.
ಜನ ಹೇಳಿದೆ
Tulasin, yeah. Please mute yourself. Yes. Have you opened the workbook for Bangalore Cafe?
Yes, ma'am.
Yeah. Now this you have to do it in the same way as you have done your pharmacy case. But of course, I'll be guiding you throughout this case study. Now, in this case, your 0 year is 2019. I'll repeat again. 2019 is year 0 in this Bangalore Cafe case. Now, in pharmacy case, directly year 0 had been given and then year 1 to 5 had been given. But in pharmacy case, 2019 is a 0 year. From 2020, the business or the cafe will run in a full-fledged manner from 2020 till 5, from 2021, 22, 23 and 24. So a period of 5 years. Okay. So to start with the quantity. Okay. Quantity means what? Volume sold by Bangalore Cafe. So let's begin. Yes. Now, as I've told you, coming back to the case study. Yes. Please come to the appendix here. Average daily sales expected for the first month, post which it is expected to grow at 1% every month. Now, coming back to this workbook now. See, in the year 0, in the initial year, okay, 100 units, year 0, it was planned to sell. 100 units of tea, okay, 50 samosa, 50 Maggi. 50 is for Maggi. And puffs is how much? It is 30, shakes is 20. Puffs is 30, shakes is 20. This is the initial, what do you say, workout or this strategy made to sell up. So you have to enter the details here. Okay. After this, what you're supposed to do is, from the first year, 2020, every month we have 1% increase. But as I've told you, I told you something that time. Moment we start, you'll not see an increase for the first month. Post which, slowly it will rise. That's what had been told, right? So after post 1 month, we see an increase in sales. So which means only for the first year, we cannot take 12%. See, moment we start the cafe in a full-fledged manner, we can't expect increase in hike in sales. 1 month is a relaxation period. After that, from second month onwards, you have an increase of 1%. Now, only for 2020, we cannot take 12, we have to take as 11% increase. From 21 onwards, it will be a 12% increase. From 21 onwards, everything seems to be normal. Every month there's 1% increase. But only for 2020, except for the first month, for the remaining months it is an increase. So which means it is 11% increase. So how do we compute it? Equals to 100 into, open the brackets, 1 plus 11%, shift key, close the brackets. So you should be able to get 111. Okay, first observe it and then you can start doing, because if you're doing along with me only for this first half, later on you'll get to know, you'll get the knack of it. Okay, then for the year 2021, proper 12% increase. So equals to, which will you take?
111.
Very good. Into, open the brackets, 1 plus 12%. You should be able to get 124. And now from 124, you can drag till 24. Like this. That's all. So like this, you're going to calculate for samosa, Maggi, puffs and shakes. Quickly finish off this. Work out the quantity.
Ma'am,
Yes, Pa. Tell me, Pa.
Ma'am, could you explain why did you take 11%?
Here, the 11%. Why I took 11%?
Yeah.
See, but here, coming back to your Word file, in the appendix, what has been given? Average daily sales. So what you're seeing, this is all a daily sales. It is not a monthly sale. This is all a daily sales. You'll come here to calculate the annual sales. So what you're doing is a daily sales. So what it says, daily sales expected for the first month is being given below, post which it is expected to grow at 1% every month. Okay, so for the first month, this remains the same, after which there is an increase of 1%. So coming back to your workbook, now as I've told you, 19 we are not doing anything, we are just putting the values. 19 we have not started off the cafe, it is just one homework we are doing, that's all. But from 2020 onwards, the cafe is working in a full-fledged way. So what it says, for the first month, we cannot have an increase in sales. Post first month, we'll see a increase of 1% every month. So what happens when we are running the cafe from 2020 onwards, okay, on a full scale basis, 1 month there is no increase. Moment I start in, let's say I'm starting from April, okay, I cannot have a hike in April. I have to consider from May only, from May to March. So which means for 11 months only I can consider the increase in the sales, not for 12 months for 2020. So that's why I have considered as 11% only for 2020. So what I'll do is equals to, this is the base 100 units into 1 plus 11%. 21 onwards, what happens? Every month we have a promising increase of 1%. So which means total increase in the sales is 12% for the entire year. Each month 1% means 12 months 12%. So from 2021 it all rules out to 12% increase. Is that clear?
Yes, ma'am.
The same thing complete for the rest, samosa, Maggie, puffs and shakes. So equals to 50 into, so like this, I'm just working out for you again. You can just look out. See, I'm taking here as 12%, 62. And from here you can drag it, no problem. See, like this you're supposed to get. Please cross check the values. And the price part also you can update it. Now price, let me tell you. See, for price, here it says there is an increase in the quantity. Average daily sales expected for the first month, post which it is expected to grow at 1% on every month. Quantity is being reflected here. See, quantity we have an increase every year every month 1% we have an increase in the quantity sold. But here nowhere it is being put up as price has been increased here. If price had been increased, then we will also consider increase of price every month. But here we don't have such information. Okay, only increase in terms of quantity sold is being given here, mentioned here, and not the price. So what it means here, in your workbook, you have to put up the price of tea, samosa, Maggi, puffs and shakes. And here, since we don't have any information of increase in the price, okay, we are going to put up the same value for all the years. Okay, so you can again start with year 0. Year 0 is just, we're just putting off the values. So it is 20 for tea, samosa 30, 60 for Maggi, 80 for 80 for puffs, and 150 for shakes. And the same values remain for all the years. Because for some time he needs to be stagnant in the prices. He cannot he cannot increase the prices in the initial stage of the cafe. That can't be done. Then after some time he can go for the increase in price. That's all. This much you do. Complete the quantity and the price. Yes, are you done with putting up the price?
Yes, ma'am.
Fine. So you can save till here, quantity and the price, and then we can put up the annual sales in the tomorrow's class. Okay, so please save your workbook. Don't forget to save, and we'll see to that in the next class.
Thank you, ma'am.